See, most traders focus on entries when professional traders focus on risk. Here you can see the executions before I left the house today. I traded about late lunchtime around 4 p.m. and I took a call position or buys at this area here. You can see this is a 15-minute chart. I made, I think it was like 400 or something like that, or maybe like 250. I'm practicing going small size so that I can develop my psychology around having a small position, because essentially having a big position or oversizing is exactly how you blow accounts. So I'm working on my discipline, and I took another trade before I left the house, and because I put my risk really tight, I ended up taking a loss, even though the plan was to take these highs and continue to hold for that position. Now, it wiped out my profits. I took a loss, and this is a demo account. I still have to pass the test to get $6,000 because it's $100,000 account. And as soon as I pass the test, they're going to give me a real account. And then whatever profits I make, I'm able to take 90% of it. So I've got a long way to go, but if you follow my journey, you'll be able to see that we can pass it in no time. Now, when I came back from work or from my clients, I took another position right about here. And typically I don't like to chase the calls. Typically I like to buy at the base level here. And I believe this is a 5-minute fair value gap. Now, the way that I trade is typically I hold my positions until the highs get taken out for calls or the lows get taken out. And here it looks like we might have a slight pullback, but since I entered late, this is what happens. The market just doesn't go straight all the way, and it has to have some pullbacks. So I have my risk into profit, meaning that if it does come all the way down, I could take $3.95 right now, but I'm putting my risk into $25 because I don't want to lose any more than I already lost. And I'm looking for the sweep of liquidity up here at the top because we are now bullish, and it came out of a bull flag. So typically when it breaks out of that bull flag, it creates this dome pattern here, and it's kind of hesitating a little bit, which I'm not very happy about. But it might just build another dome here and then keep going. So I'm just going to risk this $25 that I'll make in profit and just hold the position at this point. This is as the trade is going your way, this is how you protect your capital and you put your risk into profit so that you don't lose money. So let's take a look at this live trade as it's going my way. I'm going to put this back onto the 15-minute chart. It looks like on the 1 minute it's trying to build a small dome right here. I would love it to hold that dome and break out of it to take this out. I don't know how long it's going to take. It's already 10:30. But the risk reward always has to be good, right? Like, I'm risking to make $25 to make $1,300. So obviously I didn't have the best entry, but I'm monitoring it, and I'm not going to take a loss out of this if it doesn't go my way. Now you're probably wondering, why don't you just take the $400? Well, I am practicing following my plan and trusting my plan, because typically 90% of my trades are winning trades, and it's because I followed my plan. And like here, for example, like if I didn't have to leave the house, I would have probably left it and risked below the gap here, the 5-minute fair value gap. And I would have probably done something like this. I would have gone long there. I would have risked right below it. and I would have aimed it for that high. And that's a great risk reward. Protecting your capital should be your number one job, because if you keep taking trades without a plan and without managing your risk, you're just going to keep blowing accounts because you're going to keep taking losses. And the market doesn't reward you for how big your size is. The market rewards your discipline, your consistency, your endurance, your ability to be able to follow your plan and respect your risk and not move the risk, right? If it does take me out, then I'm just going to go back in at this fair value gap and ride it all the way up again. Okay, so, I mean, it is what it is, right? We manage the risk. It's probably going to come back into the fair value gap. I'm on the 30-second time frame now. Let's take a closer look. Usually when it breaks the dome, it wants to come lower. I wouldn't be surprised if it just reclaims it and starts going back up again, because it's been holding this support area here. Yeah, see? Oh, it was so close to my risk. Oh, there it goes. Now it's probably going to go take me out. All right, that's it. Okay, well,
order filled.
You guys saw it, right? And my position size was actually pretty big. But like I said, it's a practice account. I will probably look for another position here and make that plan again to take those calls, maybe at this level, and aim for those highs again, maybe to this high this time, and risk right below this gap. So that's what I'm looking for. This time I'm probably gonna go in with 10 micros, which is 1 mini, and I might just add to the position as it's going my way rather than if it doesn't go my way, because I don't want to continue to keep taking the losses, obviously. It is so important to know when to put your stop loss, right? So for me, I always look at where the most important fair value gaps is. So for me, like I see this 15-minute fair value gap, typically it likes to come into the gap and then it goes up. So I would love for it to just kind of come in here and continue to keep shooting up. If it doesn't come down to touch the box again, then I mean, I missed the trade and I have to just respect my plan, because my plan is to get in at the fair value gap. And only if it holds it, because if it inverts it and it goes through it, then it's just not going to work. So I'm going to sit here. I'm going to enjoy my dinner. I know it's super late right now. It's like 10:30 p.m. Pacific time, but I'm trading the London session. But the whole point of trading is that if you master your risk, you will be rewarded. You will be rewarded. You have to be so disciplined to manage your trade, to manage and trust your plan, to follow the plan, to stick to your risk, and go small size so that you can keep practicing and stay in the game. Because I mean, if you're trading with a real account, you know, you can't keep taking big losses like that. Over time, you know, a couple $100 here and there, it's going to be a couple $1,000 here and there, and then $100,000 here and there. If you can't respect a small win, then how are you going to respect a big win, right? If you have $150 in your bank account or in your trading account versus $150, like if you don't respect the $150, then how are you going to respect the $150,000? It's just going to mess with your psychology, and you're not going to be a good trader. And that's why 90% of traders fail. So anyway, like and subscribe for more videos like this. Comment below what other videos you would like to see. And I'm just going to stay here, listen to music, and I'm just going to keep the live running until I decide to take another trade.